Okay, so real quick, want to talk about buying the dip and why every dip is not a good dip to buy. All right, so number one, you want to buy the dip when things are away from the highs. So at least 20 to 30% away from highs, you want to start buying, right? But if we take a look at something like AMD, let's see how far away AMD is from the highs right now. AMD is around, at this point in time, around 44% from the highs. Okay. AMD is around 44% from the highs. We're going to compare it to this weed stock, Canopy Growth, aka CGC. Now, if you look at CGC, you can see it's $2. But what was the highs on CGC? Yeah, you got to go way up there. So let's see how far away from the highs is CGC. Approximately approximately 99% from the highs. Okay. Why is CGC not being bought versus AMD? Right. So why will AMD get bought and CGC will not get bought at this point in time? All right. So a big part of buying a dip is number one, it needs to drop low enough. Number two, it needs to be a profitable company. People have to want to buy it. Right. So let's compare AMD and CGC. So you can look at the finances here, and there are three things that are important, right? So you don't have to look at everything on here and have to examine everything. Look at a few things. Go to the income statement. You want to look for total revenue and gross profit from the income statement, right? Total revenue is how much money that they made during this given time, and then profit is how much they was able to keep, right? The cost of revenue is how much it costs them to run the business. Okay. So you look here for AMD, you want to see that the revenue continues to grow and you want the profit to continue to grow. And this is annually. So this is once a year. You see, you got 9, 16, 23, a little dip to 22, which is not huge, then 24, right? So we can say that revenue is growing. Profit, you got 4, 7, 10, 10, 11. All right. So we're growing. You're growing. That's good. You go to cash flow. And what you want to look for here is free cash flow. This is how much money they have that they can spend on anything they want to spend it on. Okay. Same thing. You typically want to see that it's growing, but bare minimum, you want to see that it's at least positive. All right. So 2020, you see it here, increase there, slight decrease there. You got a decrease here, but it's expected to get back on track, trailing 12 months. Okay. So they are still positive, which this might be a big reason that they dipped. All right. Might be a big reason that they dipped. But this can happen for many different reasons. There could be some investments that the company makes. There's a multitude of things. It's kind of where we have to dig deep. Okay. So AMD, I say all that to say that AMD is a company that will get bought. I guarantee you. Let's take a look at CGC. Let's look at the financials for CGC. And this is as deep as the fundamentals is going to get for me. I don't do fundamentals too much, but this is the stuff that matters. Look at the total revenue. Total revenue here. You want to see it increase. What is it doing? Decreasing, 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 decreasing. What's the profit doing? It was positive here, big negative there, back positive again. So inconsistent with the profit and decreasing with the revenue. Not good. What's the cash flow? How much money do they have that they can spend? Negative, 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 negative. So they're trying to get this number down, but still negative. Okay. That is a huge reason why CGC dip is not being bought right now. And AMD's is likely to get bought. Also, you have to take into account the basic things such as, AMD is a stock that is in a hot sector. That helps a lot. With AI and they deal with the chips, all things of that nature. Trump has already said he's going to be putting 500 billion into AI infrastructure. I mean, it's a no-brainer right now. Um, yeah. So from that point is how do you buy the dip? All right. So there's a couple different ways you buy the dip. One way is to let it fall to a support. Okay. So kind of like it has done here, you let it fall to a support, right? After it has already been down, bare minimum 15, 20%. All right. You don't want to buy it at the highs. You buy during the dips. Okay. You don't be scared to buy at the dip, especially when you have the financials to back it. All right. If you buy the dip, you will win. That's the name of the game. In the history of the stock market, right? And this isn't true for every stock, but the overall picture of the stock market here, I'm gonna go back as far as I can go back. I'm gonna make it a weekly chart and I'm gonna show you guys this right here. Let's see how far we can go back. The data starts in 93, 94. There has never been a dip that hasn't been bought. So until this changes, keep buying the dip on good companies. All right. Wait until they get down enough and then strike whenever you see your setups, right? So bullish divergence, drop into a support, we'll use the 200 MA, whatever you use to buy the dip, that's how you do it.